Okay, let's do an introduction to managerial accounting. Most of you have probably had financial accounting and now you're wondering, well, what's the difference? And managerial accounting is going to be internal, so it's going to be for the managers of the organization, the CEOs, people inside of the organization, all the employees inside the organization, and it's future oriented. So we want to be able to make decisions based on that information. Financial accounting is more like a scorekeeping. It has a historical orientation that provides information to owners and other users outside of the organization. So investors, the SEC, lenders, all those people would be interested in financial accounting. Here's a nice little summary of the differences between managerial and financial accounting. So managerial accounting service perspective is internal to managers, people within the organization. Its time frame is going to be present and future oriented, and its concern is for individual units of the organization. So any department or any person within an organization could request a report and have the managerial accountants prepare that for them. Also, it's reported frequently and timely, so we don't have to wait till an accounting period ends. We can do it anytime we need the report. We could pull a daily report, we can pull a weekly report, and also the relevance here is going to be more important than reliability. So is it going to allow us to make good decisions? We don't necessarily follow GAAP, which you see here. There are no reporting standards that are imposed. So as long as we get good, reliable information that's relevant, hey, then we're good to go. Financial accounting, as you probably realize, is more external to investors and creditors. Its time frame is historical, so we want to look back at what happened over a particular period, and it covers the entire organization. Now, financial accounting is reported monthly or quarterly or yearly. And then here reliability is very important. So we do follow GAAP, and there are preferred or prescribed formats that we have to use. Well, if you haven't realized it already, recent trends are indicating that companies that provide services are a growing part of the economy. And according to a recent census, 70% of businesses provide services. And more companies are choosing to conduct business in the global marketplace. So to compete in the digital age, time is of the essence, as you're all aware. Customers expect quick responses to their needs, and in order to achieve this, businesses often use an enterprise resource planning system, which is a software system that can integrate all the company's functions, departments, and data into a single system. In addition, companies engaging in e-commerce use the internet to give customers access to company and product information 24/7. You may have heard of just-in-time management, which means that the business produces products just in time to satisfy the needs of its customers. This helps reduce companies' costs because there's less inventory to store and insure, and it also reduces the risk of the inventory becoming obsolete. Another management philosophy you may have heard of that's an emerging trend is TQM, which stands for Total Quality Management. And TQM means that the company is continuously looking for ways to improve its products and services. As a result, the company can reduce product defects, and it leads to higher customer satisfaction. All right, I'm sure you're all familiar with CPAs, but I'm not sure you're all familiar with CMAs, which is Certified Management Accountants. And the Institute for Management Accountants has developed standards to help managerial accountants deal with challenges they may face in performing their jobs. So the first standard you see up here is competence, which requires a certain level of professional expertise as well as continual development of skills and knowledge. This also involves recognizing any limitations that would prevent the successful performance of one's duties. Competency means that the managerial accountant will follow laws and any applicable technical standards. Any recommendations he or she makes will be accurate, clear, concise, and timely. Then we move on down to confidentiality, which requires that managerial accountants will only disclose information to appropriate parties. Information obtained by working for a company should not be used for unethical or legal advantage. Then we have integrity, which involves avoiding conflicts of interest. And finally, credibility, which means that the managerial accountant will communicate information fairly and objectively. Any information that is relevant to a decision should be disclosed. So, if an ethical situation is encountered, the managerial accountant should follow the organization's established policies. In addition, or if additional steps are needed, he or she would discuss the ethical situation with an immediate supervisor, an objective supervisor, and if necessary, an attorney.